In this video, we'll look at a simplified version of the first step of our top-down approach to asset selection. It starts with market. We'll be looking at population growth, employment, and infrastructure projects. Population growth is comprised of overseas migration, interstate migration, intrastate migration, and natural increase. Melbourne and Sydney have been the main beneficiaries of overseas migration, and Brisbane also has a relatively high number of overseas migration coming into its city. Melbourne and Brisbane are the main beneficiaries of internal migration, with Sydney, Perth, Adelaide and Darwin all seeing negative internal migration numbers as residents leave for Melbourne and Brisbane. What we're looking at with population growth for a long-term capital growth strategy is long-term population growth over 1.2% per annum. Ideally, we'd be looking for 2% or more for rapid price growth. For a cash flow strategy, you're usually looking at a minimum of 1% population growth per annum. Population growth of 1.5% per annum in a cash flow region is achievable. But what we want to do, we want to avoid negative population growth over the previous 10 years, and we want to avoid negative interstate migration. If people are leaving that city, there's something going on in the market there that needs to be investigated. When we're looking at employment, we want to be looking for regions that have the capacity for high-paying jobs. This is where residents can pay higher prices, and these people will expect larger and higher quality dwellings. We want to be looking at the unemployment rate as well. A high unemployment rate will cause downward pressure on wages as the supply of labour in the market increases, and some workers may even leave the region altogether. And at a large scale, this will lead to a decrease in the demand for housing in that region. Now, if we have high employment levels, that is low unemployment, this could cause upward pressure on wages, and this could attract new migrants moving into the region. This is likely to increase demand for housing, pushing up prices. This can be good, but you want to determine whether these jobs are long-term jobs or short-term jobs. If they're long-term employment opportunities, it could be sustainable. If they're not long-term, it could be a short-term price bubble. Here's a couple of examples. So at full employment, everyone wants a house. So everyone starts to buy houses. There's a lot of demand in the market. Initially, there's the same amount of supply, so prices will start to go up. We're in a market where there's no employment. On the other extreme, no one can afford a house, so no one is buying a house, and even the rent is too high. So the rental prices start to fall as people can't afford the high rents. The ideal levels of unemployment that you're looking at is somewhere between 4% and 6%. Less than 4% can cause an overheated economy and rapid price increases. Higher than 6% could dampen demand for real estate, as unemployment becomes more of an issue when people start to leave the region. Now, of course, these numbers, it depends on the overall economic environment, and these are a rough guide for what you should be looking at. If employment across the nation is below 4% or higher than 6%, then what you'd be looking at is more of a relative analysis of where employment is at between different regions and whether it is causing a bubble or whether it is causing asset prices to fall. We want to find sustainable employment markets. A market where employment stays between that 4 to 6% mark, ideally, and that will basically describe most Australian cities. We're looking for these long-term jobs, so we're not looking at mining towns where employment is very cyclical and the markets will boom and then bust. We're looking more for diversified, stable employment markets where if one industry goes up and down, it's going to have a small effect on the overall market and workers will be able to find jobs elsewhere. We want to be looking at the major infrastructure projects that are in the pipeline. So with train lines, one thing to be aware of is that high density housing is likely to be approved near train stations and they can offer development potential, especially if the train lines haven't been built yet. Highways can ease traffic congestion in a region and it can also have a positive effect citywide. If you're building or you're buying property right next to where a highway is going to come in, it may lower the desirability of that particular asset. But for a region, having access to faster roadways across the city and more trade coming through is a big positive. And tunnels will ease traffic congestion and they will have a very positive effect citywide on traffic. Bridges will also ease traffic congestion, have a positive effect citywide, and because of the engineering and architectural marvels that bridges are, they can increase desirability. For example, the Sydney Harbour Bridge. Airports provide huge economic benefits to the city and to nations, and it gives the region a much further domestic and global reach. And utilities must be provided for a region to have a successful economic life. Telecommunications, electricity, and a range of other services are vital for the modern economy. So when you see major infrastructure projects in the pipeline, get to understand what they are, get to know what the timeline is for them being implemented, and if you can, get in there early. There is an opportunity for substantial capital growth if you can beat everyone else into these areas. And listen to the media. Keep an ear out for these projects, but filter out the white noise. There's a lot of randomness that the media likes to promote and discuss over the radio or on TV. A lot of it is just rubbish. But if you look at federal, state, and local level projects and check out government websites on the infrastructure being developed in the state, across the nation, or in the local council, local region, then you'll have a much clearer picture as to what is actually happening with these projects and what the blueprint is for laying out these regions.